going to continue this conversation. I'm curious what Mohamed El-Erian thinks of all this. He's now at the table, chief economic advisor at Allianz, president of Queen's College at Cambridge University. The markets are liking what they're hearing right now. It's a 90-day reprieve. The next 90 days super volatile, or do you think it's a nice straight line?
It's not a straight line, and you're going to be really frustrated when you hear the opinion of economists like me, because you're going to be reminded of President Truman asking for a one-handed economist, because there's so many issues in play. What we know for sure is the first thing you've heard is whatever your probability of Fed cuts was, now it's fewer cuts and later. And what we know for sure is that economic activity over the next 90 days will be higher than it would have been otherwise, if only because people want to exploit a short-term window. Beyond that, you have all sorts of questions that have to be resolved. You have to figure out not just the economics, but the politics and national security implications of all this.
Explain this, though, and I think this was a question Joe was trying to ask Scott Besson about. The idea that we were supposed to have, it was that we were going to see in the economic numbers a sense that there had been a paralysis that had changed capital investment, that had changed the way the consumer was behaving. There are still economists out there who say, we're going to see it in the numbers. We're going to see it in the numbers. We just haven't. They're surprised they haven't. They say, oh, no, it's not this month. You got to look in June. You got to look in July. Will we see that?
The answer is, I don't know, but I suspect so. The soft data has collapsed. The hard data has been incredibly robust. And that's why economists who look at the soft data extrapolate from that. Economists that look at the hard data extrapolate from that. My own gut feeling is we will get some slowing in the economy. We will get some higher inflation. But most CEOs will remain in the wait and see. Let's see what happens after 90 days.
What does that do to employment, though? Because that's something else that we think is what Jay Powell would otherwise be watching.
Yeah, I don't think we're going to get any spike in unemployment. I think CEOs are just waiting. They don't want to take any major decisions that has longer-term consequences. If you lay someone off and it's wrong, you've got to find someone else, retrain them. So any decisions that have longer-term implications, people will wait for now.
Mohamed, you were really dovish on inflation, and I was like needling you that you thought 3% was okay. You said 2.5 to 3, and you said the only reason they're at 2 is because of what country decided on 2?
New Zealand in the 1990s.
You said that's just the New Zealand rate. So now the tariffs, going to be a 90-day pause. So the prospect of the tariff, the inflation caused by tariffs is taken off the table. Why immediately say that the growth side looks better instead of saying, oh, there probably won't be inflation? Why doesn't it free the Fed to lower rates since they don't have to worry about inflation and lower mortgage rates, get the economy, in case there is, some hangover from this and unemployment? Why not preempt it? Why not do it since inflation is not a problem?
So the inflation impact is ambiguous. So beforehand, we had a total embargo on trade, With
China.
With China. And the result of that is that a lot of activity wasn't going to take place. Now you're going to have some activity taking place, good for growth, but it will be taking place at a higher price, bad for inflation. This is why there's so many different forces in play. I think the major question you have to ask yourself is, if you were a CEO, Joe, what would you do? If you had to have a major decisions, what would you do right now?
Well, I'd bring everyone back 5 days a week. That's the first thing I do.
I would do that too. What else would we do beyond that?
I would definitely, not have any relationships with anyone that worked at the company. I think that would be my second. Isn't that important? You mean actual strategic moves?
So what you're hearing now, for example, is in the past we realized that our supply chain should be C plus 1, China plus somewhere else. Now we think it should be C plus 2 or 3. Now, if you go down that path, then that means rewiring supply chains.
Right.
I mean, how much of it comes back to the United States? Does it foster investment in the United States, or is that just to try and keep the Trump administration happy?
No,
and if it does, so what?
I think if you get clarity from the administration that our real goal is revenues and reshoring, which means that tariffs will stay high permanently, it comes back. If, however, you hear them talk about a fairer trading system and we have escalated to de-escalate, then you don't bring it back.
Let's say we have a 10% tariff across the board, and that's sort of almost like our version of a VAT. I know they're not the same, but what would that ultimately do in terms of bringing in revenue? Would you be happy with that? Would you think that would actually create a real damper on economic movement?
So it will not bring in massive revenues. Companies will recalibrate, but will not reshore. 10% is not enough for companies to reshore.
But they're just going to move to other countries, potentially.
Certainly, people are going to have much more diversified supply chains.
And we can decide that's a good thing. Inflationary in the short term, likely.
Correct. Inflation in the short term, deflation in the long term. That's absolutely the case on that, yes. So this is why you will get really frustrated as more and more economists opine, because there's so many possibilities right now. When I was here last time, I told you we are on a very bumpy journey to two destinations. One is fragmentation, and the other one is the U.S. is stronger in a fairer trading system. We are now slightly higher on the second probability, but it's a 50-50 situation.
You missed $58 oil, $57 oil. That's another reason why inflation might not...
Correct,
right.
correct. And also,
you think
rates are back up.
Does it stay here at 63, or is it possible it was supply and it goes back down, or this is a knee-jerk?
So it will depend on President Trump's visit to 3 OPEC countries.
Yeah, that's coming up.
And see what happens there.